This is Shutajanand from etmarkets.com with our regular morning podcast of all the key news, views, and cues that may swing your market through the day. Well, to start with, a new amnesty scheme from the Modi government to the tax dodgers, a reversal of stocks rally in the US, slide in greenback, and early indications of disappointment from Wednesday's Opec meeting set up a mixed field for the domestic equity markets on Tuesday. So the setup is quite weak. The markets could start flat, but probably gain momentum probably in later half of the session. Amid the chaos of demonetization, the Modi government on Monday unveiled a scheme to give cash holders another chance to come clean with their hoarded money. The new scheme proposes 50% tax and 4-year lock-in period for unaccounted wealth. The government warned that they'll be slapped with a penal 85% tax if they don't take advantage of this and get caught subsequently. The government has already moved income tax laws amendment to enable the window. Meanwhile, as banks got flushed with cash following the demonetization drive, the government said it was considering increasing the amount of bonds issued under the market stabilization scheme to drain out excess cash. The earlier plan was to issue Rs 20,000 crore MSS bonds in the year ending March. Elsewhere, the US stocks declined in overnight trade in their worst performance in nearly a month as some investors booked profits after a record-setting week. The Dow Jones Industrial Average fell 0.28% to 19,097, the S&P 500 lost 1% to 2,201, and the Nasdaq 0.5% to 5,368. The US dollar also took a breather as global bonds steadied after their recent rout, while equities flattened as political risk resurfaced in Europe ahead of a referendum in Italy this weekend. The dollar index hit an almost 14-year high of 102.05 on Thursday before slipping further to 101.32 on Monday. Oil prices remained jittery in the countdown to Wednesday's OPEC meet. Even as OPEC experts ended a meeting on Monday without agreeing on concrete details of a planned reduction in oil output, US crude futures climbed about 2.2% to $47.08 a barrel on the New York Mercantile Exchange after initially showing some weakness. In other news, Indian IT services firms are speeding up acquisitions in the US and recruiting more heavily from college campuses there, anticipating a more protectionist US technology visa program under the Donald Trump administration. TCS, Infosys, and Wipro, which have long used H-1B skilled workers visas to fly computer engineers to the US temporary to service clients, stars from those three companies accounted for around 86,000 new H-1B visas workers in 2005 to 14. Lastly, a quick look at some of the interesting headlines from the print edition of ET Markets. Liquid mutual funds are seeing redemption pressure as banks begin to pull out funds after RBI ordered banks to park all incremental deposits garnered between September 16th and November 11th with the banking regulator. But despite the turmoil in financial markets, November is set to be a good month for the mutual fund industry, with mobilization from retail mutual fund schemes likely to cross Rs 12,000 crore, the second highest in this calendar year. Retail schemes include equity mutual funds, equity-linked savings scheme, and balanced funds in which typically retail investors invest. Shares of public sector banks declined on Monday following RBI's surprise move over the weekend asking banks to transfer 100% of their cash under the central bank's cash reserve ratio. But fund managers on Dalal Street said the weakness in these stocks is temporary as an increase in the market stabilization scheme limit would revive sentiment. Well, we'll leave you with that much for now, but do log on to www.etmarkets.com for continuous updates on financial markets.